Let's welcome on board Vikash Kumar Jain, CLSA investment analyst, and figure out what he's making of the world right now. Vikash, hi, good morning. Good to have you in the show. I don't know how to really perceive what's going on in the world, so let's talk about India, what we understand. And, the good thing or the silver lining so far has been that at least in the last 1 month, we've seen FIIs, change course. But does that look like it's permanent in nature, or would you say that's a very tactical positioning?
Although we would like to talk more about India, but what's happening in the market is not just India's doing. It's basically a kind of a you know, a corollary of what's happening globally. So globally, if you think you are uncertain about global trade, you would want exposure at places where you are less exposed to global trade. So that's where India comes in. I would say that is also the reason why FIIs are looking at India as a bit of a hiding place for now. And that is what has changed their behavior as well. It's not so much of what has happened because domestically things haven't really changed that materially. Yes, there is more confidence on rate cuts, but beyond that, there hasn't really been any material change in terms of domestic things. And that's why even our report from today talks about the fact that is India's TINA back, possibly for now at least. And that's after 6 months because September end is when our market stopped out. October is when people were talking more about China. November, December, January, people were talking more about US and how things will be good for globally for markets other than that as well. And it's only about March onwards as where suddenly people started getting a bit more worried about global trade. If you think it's been only less than 4 months of this year, but they've been anything less than in terms of exciting, if I were to call so, in terms of volatile. For example, January to February, if you look at the first 2 months of this 4-month period, India was the third worst performing market in the world. And March and April, the 2 months over there, India has been the best performing market in the world. So that's really a complete change in fortunes for India. All in all, the scorecard for the year is still 3% YTD, which doesn't really tell you enough, but it's been pretty volatile times on this overall period. And a lot of that has been because of what's been happening globally.
Right. Very good morning to you, Vikash. Cheryl also joining in the conversation. And the fact that you did say that it looks like it's an India's TINA moment, that there is no other alternative, that could be one of the reasons why we are seeing this sort of an excitement, at least in investors' mind. And that's the reason why the shift is happening to India. So if I have to read between the lines, do you think that this is just temporary? It is not permanent? And we should actually be more cautious when you talk about our approach for Indian markets?
So, again, none of us can be certain about it. And that's why people want to hide in a place like India, given the way the whole global trade policy is changing by the day. But if you were to think about, for example, the president's own talk of the art of deal, etc., if you go by that playbook, then obviously he will escalate to the highest level and then kind of really make it at a level which is somewhere in the middle in terms of finding ways to deal. To get to a deal. I would say as confidence rises that the US will sign deals with more and more of their partners. And perhaps yesterday there was talk that they've started talking to China as well. This uncertainty on global trade will reduce. As this uncertainty on global trade reduce, that that desperation to hide also goes away, and that could maybe take away this temporary TINA, which people are feeling about India. But again, a lot of this has a lots of ifs and characters who are difficult to predict in what they would like to do. And that's why it is still, at least for the next 90 days or whatever is remaining of that 90-day period, it will be a headline-driven market.
Right. Hi, Vikas. Good morning. This is Shrishti also joining in. But since the FIIs are finding Indian markets to be the hiding place, Vikas, help us understand in which sectors they're finally settling in, because we are just reading your report which says that in the month of March, what kind of positioning they have done. But of late, since they have been buyers, so what changes sectorally are you observing?
So a few things that we've observed. Firstly, after a very long time, after almost about 7 to 8 quarters, value was by far the best performing style in the first quarter and of this calendar year, that is the Jan to March period. And in addition to that, there is now a tendency to look more towards domestic oriented play. I would say the places which will be under favor is domestic plays, more on consumption, more linkage to interest rate sensitives, and also maybe some gainers of a weak global outlook, because commodity prices etc. also get impacted, and some consumer kind of companies who use commodity as an input could get some gains around it. So basically, domestic consumption and rate sensitives would broadly be the areas which they will favor. Areas which are exposed much more to global growth is where people will be more tentative.
Interesting. Vikash, what about, debt-linked investment opportunities? While, of course, in the month of March, there's been an outflow, but do you think now with the interest rate trajectory easing, money would perhaps move back a little bit to fixed income?
In fact, interestingly, that's what we talk. If you're talking more about India, one of the reasons why we believe that significant rally from here on may not be so easy is, if you were to look at right now, and this thing has changed dramatically in the last few weeks, India is the most expensive market in the world. Okay, India is the Indian PE of Nifty that's the only market which is trading at over 20% premium to its long-term average valuations. That is 20-year average valuations. Even on a simple percentile basis, only 10% of the days has the market been more expensive than where it is today. So basically, India's equity valuations are quite extended. But the other point that we take a lot of pains to explain in our report from today is that even what has happened and what has also fueled this rally is a big correction in Indian yields at a time when US yields have been going up and even other yields have not been falling that much. So I would say that we have reached a point, and this we do by comparing Indian yields to other global benchmarks, to currency depreciation expectations and how they have moved. Also looking at historical correlations to real rate as well as RBI's own repo rate. We come out with the point that perhaps a large part of decline in Indian bond yields is behind us, and incrementally, that will no more be that big a tailwind. So both Indian bonds and Indian equity appears quite extended on valuations. Yes, uncertainty on India is much lesser than many other markets, and that's fueling this favorable reaction. So let's see how long that lasts. But in terms of valuations, further room is very limited for re-rating.
So Vikash, what option does an Indian investor have? Because we don't have so many global options to invest in.
Well, yeah, I mean, but again, we had a similar kind of a situation over the last sometime around September, October, November or so. See, at some point of time, any big moves in the market only happen at times when foreigners become reasonable buyers. And I think that could get deterred because foreigners have other markets as an option. Yes, domestic flows, what that ensures for our market is provides some kind of a smoothening out in a corrective period, maybe prevents a big dramatic decline and a drop in the market by buying coming in. But domestic flows in itself, the way they have reacted, if you look at the history of the last 2 years or so, the best months have been months where foreigners have come in. In fact, when domestic flows have been there, even large flows, but foreigners haven't participated, we haven't really seen big up moves in the market. So I would say that from that perspective, it is important that we do not forget that big moves are still linked to when foreign flows turn. And that is what still matters for the markets to go up significantly.
Vikas, everyone's actually waiting for those FII flows to return and with consistency actually. But apart from the flows, one of the other factors that everyone watches out for is the earnings growth. Given the fact that we've seen a substantial EPS correction as well for the Indian markets in line with what exactly was happening globally, and the fact that you had nervous investors, we saw EPS cuts coming in. What's your outlook for the earnings growth trajectory going ahead for Indian markets?
So, CLSA, our estimates are still 2 to 3% below that of consensus for Nifty. And interesting trend that you have noticed since the correction started from end of September is the reporting period has actually been a nervous period for the market. If you look at October to mid-November, which was the reporting season, or Jan to mid-Feb, that's when the markets have been a bit more nervous. I think we are again stepping into a similar kind of a busy reporting season over the next 7 weeks or so. And that's where it'll be interesting to track. I still see that there is risk, despite the fact that India is the market which has seen the biggest earnings cuts in the first quarter, that is the March quarter. We still see risks for further downgrades. There is still expectation of 13-14% EPS CAGR over the next 2 years in terms of consensus expectation. And that's where there could be risks for further downgrades. And that's the other reason why I think our expectations of rally shouldn't be very high in terms of, because room for re-rating isn't very high. We don't have too much confidence on earnings upgrades yet, which could create the room for re-rating. None of those are present. So that's where we should be a bit more guarded in our expectations of big up moves from here on.
Vikas, but I just wanted to touch upon financials because that's the sector where we have the most of the FII exposure right now, and we have been witnessing the kind of rally, at least on the index front. What a move we are witnessing right now. But help us understand that is the interest still lies for within financials when it comes to FII's mood right now, and from banks, do you see that moving into some of the NBFCs, maybe some of the MFI plays going ahead?
Okay, so a few questions that you asked over there. Firstly, we've made a slew of changes to our portfolio today, and banks is one of our overweight sectors. And so of the things that you ask, see, interest rate sensitives should react positively in a falling interest rate environment. We could still have a few more cuts left by the RBI. So from that perspective, if you see, NBFCs have anyways done very well. When you talk of things like MFI, that's where the sector has its own set of challenges and a period where things have not gone very well. Plus, there needs to be a willingness amongst investors to kind of add up and load up on beta. So far, they're still looking at India as a hiding place. They're not really pushing up beta in a big way. And that's where banks, which were otherwise anyways more attractively priced in the market, have found favor. Despite the falling interest rate regime, I mean, even large banks have found favor in terms of doing very well. So I think in terms of once perhaps we see a set of better results by MFIs or better commentary improving, is where interest could come in, because that's another sector which is attractively priced versus history. But there's been a period of this uncertainty in terms of whatever's happened over the last 6 months or so. So that needs to pass, be behind us, and that's where possibly. And in addition to that, there needs to be a willingness to play beta, because that sector, in a way, is not a defensive sector. That's where you get the beta amongst foreigners, and that all of that needs to fall in place for MFI to come back into play. But in general, because of valuation support and because of relative quality preference, I mean, banks and larger financials have been doing very well.
Right. Vikash, so good having you on the show today. Thank you so much for your time as always. And we were just chatting that you should come by to our studios once.
Absolutely. Thank you.
Right. Okay.